Mass layoffs are taking place today, and in contrast, we have seen such euphoria in the stock market. Of course, to those who have been paying attention, easy money policies have not only enabled this, but encouraged such behavior. There has never been a time in history when such a discrepancy has occurred, and yet the media, the analysts, the investors are all chanting and cheering for it to never stop, even for a day. Big mistake. You came here for the truth, so let me unveil that for you. I have a very interesting video, a lot of different aspects to cover. We're going to go all over the map. I'm going to talk about what's happening with the jobs. We're going to look at the airlines. I've got some economic factors. I've got things about the stock market as well. I don't know where I'm going to begin, but let's just get into it right away. All right, so let's begin with the airlines and what they've been up to. You know that this industry had been hit right away. All of the lockdowns, all of the travel had stopped, and you watched as this industry, as well as the cruise industry, anything to do with tourism, in fact, was basically just at zero. And now today we are looking at it several months later, still being a problem. We're off the bottom, but certainly nowhere near at the level they need to be in order to actually achieve a profit. U.S. airline employment to reach the lowest level in decades after we see 90,000 job cuts. 90,000. U.S. airline job cuts are set to fall by about 90,000 by the year end. And that would be very significant for one industry alone. But imagine all the others here. This is truly unfortunate to see how many people just in one area are going to be cut. So what are they going to do? Are they going to then, retrain and learn how to do a new job? Are they going to go work at McDonald's? Are they going to become Uber drivers? What exactly are these people going to do? Are they simply going to just wait on the sidelines and hope that everything comes to normal so that they can get their job back? And when they do get their people start getting their job back, are all of them going to get their job back? Probably not. It's going to be a slow and steady rise. So I think that this is going to be interesting come 2021. Fired bankers' job prospects fade with firms under pressure to cut costs. And of course, this has happened for a while now. We have watched this industry being decimated, going more towards the robo-advisors, eliminating all of the tellers that are there. Why would you have it when you could just have an iPad? More people are going to online anyway. They're using ATMs to do the basic functions. And so we have an entire industry that is unraveling. But this takes it to a whole new level. Financial industry offered workers security as the problems here in 2020 actually happened. And now the firings are back. Hiring is slower and job offers pay less. I want to note a few things here because you could see that initially they told them 2020, you're good, nothing to worry about. But here we are towards the end of the year. And as they say, the firings are back. Hiring is slower. That's another thing because previously, let's get everybody back. Let's make sure that the wheels are turning. Let's get that profitability and the productivity up. But here in this case, you could see that the slowness is clearly there. It's in the entire economy. And so the companies aren't going to hire everybody back. And when they do, right here, paying them less because they know, hey, they're struggling to find a job, will offer less, and they'll take it. Really quickly, financial services and banking has too many people. They actually say here, the prediction here is that the industry headcount will shrink by 10% by mid-2021 from its level prior to the issue in 2020. Next year is going to be a very low hiring. There will be some layoffs. As I said, 2021, big deal. We're going to see a lot of different things unraveling in that year. Just take a look at the fresh numbers, whether it happens to be, your state claims, unemployment insurance, emergency claims, and so on. I mean, there are 20 million people right now when you add up these numbers, and that just shows you how significant this is. We are several months out from the peak of this problem. all of that, we're told, hey, everything's fine now. Everything is totally fine. I see the comments all the time. What are you talking about? I look around me and everything is fantastic. 20 million people are on some form of assistance, and that doesn't include food stamps. That doesn't include so many of the other things that are simply required at this point in order to keep the whole thing from just imploding. Flying habits are set to change drastically for the long term, with 8 in 10 airline passengers, 83%, not expecting to return to their previous travel routines. This is just, it's unbelievable. I don't know if that's the case, 83%, but I know that a lot of people plan and perhaps already have been traveling within their own countries. If they can do so, they think, well, you know what, now's the time to do it, so let's go that route. I don't know what's going to happen 2 years from now, 5 years from now, we'll see. But this is based on a survey, of course. So we'll only be able to determine that as time goes on and we see the data. But I just thought it would be interesting to show you this because it kind of just highlights what we're seeing with the job scenario. If things are changing this drastically, it is not going to be good. But you don't have to worry because Goldman Sachs is suggesting that everything is gonna be okay. In fact, they say GS Economics global GDP forecasts are generally above the consensus. That's right. Well, it's just funny because they showed a whole bunch of different charts I was looking at, and they are telling you that no matter what, everything is going to be good for the stock market. No matter what, the economy is going to be just in this Goldilocks scenario. And it is something that, I can't determine that. Goldman Sachs is telling you that that's going to be the case, but it just seems so unusual that I don't know how they come to that conclusion. Take a look at the S&P 500 valuation versus history. It just shows you on the right-hand side, current and the historical percentile. It is just unbelievable to witness how significant all of these different factors are. We are overvalued on so many different metrics. We've gone beyond it all. And there's no telling where it's going to stop because of the amount of money that they've been pumping in with the QE. And of course, we're looking at all the different stimulus that they've pumped. And it's crazy. 20 trillion from the central banks around the world in a few months, $20 trillion. It had to end up somewhere. And the biggest benefit came all the way from all over the world. It came into US tech stocks. There's no doubt about it. It is absolutely apparent. And all of these stats here, this is the overall market, but a lot of the stocks barely even budged or barely moved. But you look at it when it comes to the actual tech stocks, and all of the valuations just went from like normal levels where everything else was in earlier this year and just went up practically in a straight line, and that is never a good sign. You want it to be an up and down, up and down, up and down on the way up. You want those corrections to take place. That's healthy. People, they have a day or two or maybe a 5% down dip and they say, oh, that's a healthy correction. Well, not after it's been going up 50% basically every day, day over day. That's not a healthy correction. It needs to be more frequent and it needs to be softer overall on the way up. But we don't see that today because of the madness that the central banks have created. This is a very interesting one out of the Financial Times. Former Kodak executives given millions in stock for options that they did not own. Let me repeat that, for ones that they didn't own. And I just think it's crazy. I'm reading it and I'm struggling because it just seems so strange. Wait a minute, they didn't own them? Well, they get into all the details. I'll touch on it really quickly. Company blames internal, quote, deficiencies for award and takes a $5 million expense. So here we go. Eastman Kodak handed 5 former executives stocks worth millions of dollars this July in exchange for options that they didn't own, raising questions about the company's controls. In the bottom paragraph here, the company said internal, quote, deficiencies allowed 5 former officers and employees to exercise 300,000 options that they previously forfeited. And that's according to the SEC. Okay, it's not coming from me, it's not coming from the Financial Times. This is all documented at the SEC. And this is one company that's been coming up in the news recently. And, I don't know what's going on. Anytime there's anything a little bit fishy or something's going on with insider trading, I always try to bring it to you to bring some light on this industry in general that is always trying to, receive protections from the traditional channels that you'll get information from. So I hope you appreciated that. Two pieces of information that 99% of people don't care about. Here we go. We have $500 billion. Federal spending sets a record for the first month of fiscal year. That's October. They're spending $521 billion and change, give or take. And this is just for 1 month. And the budget deficit for October, $284 billion. I told you the debt would increase. I told you that the deficit would increase, and I didn't need to be a soothsayer. I didn't need to predict that. It's just clearly obvious. Little Munchkin right there with that smug smile of his is so happy about what's happening because, you don't want to cut back right now. You want to spend as much as possible. Well, you've spent a record amount, and the results have been nothing short of terrible. And what are their solutions? Well, check out one that they may actually go ahead with. It shows you the Golden Gate Bridge tolls may go up as district faces financial crisis. Quote, it's quite brutal. And that to me is just yet another tax. Is anybody else sick of this? Day in and day out, there are problems out there. There are always going to be problems, but the solution should not be more taxation, yet this is what they always provide. Should working from home be taxed? I believe it was Deutsche Bank who produced a report suggesting maybe it's time to tax people that are working from home. I mean, it is just strange what they're suggesting today. It's never going to be something that is actually successful, though they might actually go through with it. And then we have this. Greece offers tax breaks to lure the work from anywhere crowd. It's the exact opposite. Government is trying to bring in investment, stem brain drain. Seems interesting. They just show you here that essentially promising that half of these people's income will be tax-free. And that just shows you that they want to bring these people in. They want to do things to help their economy, and they are not increasing taxation. They are trying to actually do something that might be positive. I don't know what the actual fine print is. I'm just seeing this as maybe a desperate attempt, however you want to look at it, but it could actually be positive. Global Rich trigger 1900% sales surge for the UK country estates. After a decade-long slump, the issue of 2020 has jump-started the market. I believe it is very similar to what we're seeing in the United States, where you look at people that have moved out of Manhattan, out of New York, and they are going into, whether it is the Hamptons, some are going to Maine, others I noted on the opposite end, maybe they're going into smaller towns out of their cities, and this just shows you that they will continue to do this until they feel that things are going back to normal. For the time being, the trend is still in. Last one for this video, Chipotle to open its first digital-only restaurant as online orders soar. So I'm just showing you here that yet again, we are going towards this. It's going to put an impact on the jobs that are there, whether that's minimum wage jobs, whether that's management jobs. There's all different types. They're all connected in, and I do believe that we're going to be in for a world of hurt coming soon. That means having the right education, having the right preparations made in advance, not after you hear about it, that your neighbor just got laid off and your other friend just got laid off, and suddenly it might be the same situation for you. So that's why I always try to help people to be aware of the information that is simply, back of the newspaper type of news. Instead, it should be on the front page. If you found this video informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. If you want to learn about e-commerce, you want to be able to earn some income on the side, perhaps, you can do this for free, absolutely for free, at my website, theamazongps.com. The financial system is complex and convoluted, and if you want to understand it from top to bottom, A to Z, you could learn it in these 2 books. It is available at the link in the description. If you want the audiobook instead, you can get that at themoneygps.com. Do you want to know more information? Well, I've got an entire playlist I call How to and Solutions. Definitely check it out. If you click it, I'll see you there.